Welcome friends to Old Man Wisdom. Before I start, don't forget to visit oldmanwisdom.co.uk for your free MT4 and MT5 downloads. But I'm really excited because today I'm going to demonstrate or backtest a new strategy for you. I'm going to do it live. Some of the old rules from my current strategy remain in place and I'll go over them in the video. So hang around, because I think that this is the kind of strategy that those who want to trade a little bit more often are going to really like. So let's go over to the charts. I'll demonstrate the strategy for you and hopefully it's something that you'll enjoy having a go at. So here we have the Euro USD on the 1 hour chart. You know that I like to make my entries on the 1 hour chart. I've removed the MACD, which is what I usually trade with, but I've left the multi-time frame moving average, which is like normal set to the 1 day, the 20 simple moving average. So if you were to look on the daily chart, you would see that price is above the 20 simple moving average. And so all this indicator does is plot the 1 day moving average on the 1 hour chart. So I know, without flicking across different time scales, I know where price is in relation to the 20 simple moving average. And it's as simple as that. So what I'm going to do is I'm going to highlight this strategy to you. So I'm going to try and keep this video as short as possible. And I'm going to go back to, let's say, the 1st of June, which is about there. So if you can see where this red line is, that's roughly the 1st of June. So I'm going to do the whole of June, the whole of July, the whole of August, and well, we're now in the 5th of September. So there's a little bit of September as well. So what we're doing here is, this strategy is based on, it's really trend trading in many ways. But what we're trying to spot are these, as price comes up to a high, you want to see a pullback, and then you're going to mark the high, and you're going to mark the low. And you're finding a range in between. If you're looking to buy the market and the bottom of your range gets broken, it breaks it and closes below, then the trade is invalid. If price just spikes through your range at the top, that is not a valid trade. You want it to break through the top and close above it. So let me give you a very quick example here. Price comes up, forms the high, price comes back down and forms the low. The low is where your stop loss is going to be. I want to see price dip below this 20 period moving average and then come back above it and break the high here. So in this example here, this would be the candle. Here would be your low of 30 pips. At a 2-to-1 ratio, you'd be looking for a 60 pip profit, which is up here, and that's perfect. That is a perfect trade opportunity, because, and it's based on price simply being above the 20 period moving average on the daily chart. This indicator plots it on the 1 hour chart, so I don't have to flick across. So I'm using the 20 simple period moving average from the 1 day chart to find the bias, and then I'm using the 20 period simple moving average just so that price comes below it and then moves back above and breaks the high. So let's look at a few examples from the 1st of June. I've put a line here and we'll look at some examples as we go through. There's no buy trade here and price has moved down, so we're looking to sell the market. So what we're looking for is to price to come down, to go up, and here would be the level. From this low, price has now gone up, and we're looking for it to break through, which it does here on this candle. However, I want to see price move above this moving average, and this little technique is going to stop you from getting into bad trades. Now this would have been a 20 pip stop loss, and it would have only gone down by about 10 pips, and then you'd have got stopped out. But we didn't take this trade because price didn't come over this moving average first. So then price does this up, and it's formed a high and then a low again. So here is your low. Price came above the moving average, but of course it didn't break it, and then price moved above the moving average. It's come below the moving average, so we would be looking for a sell, but it didn't break. Now your high, this is quite important as well, your high is here. So you've got a range here, but because price has broken across and above your high, and price is above this one-day moving average anyway, it's invalidated. Even though it came down and broke through your level here, and it would have actually been a good trade, but this spike above it means that the trade isn't valid anymore. However, price then comes down and forms a high. So you would have had a level here with your high or your range up here. Price went above the moving average and it's broke through your level. However, again, this is over 60 pips stop loss. So we're just not going to take the trade. We've got strict rules and we're not going to take it. The next thing that price does is come down and forms a low here, and then gives you a high. So there's your high. We're just waiting for price to break through, which it does. Unfortunately, yet again, and this proves that you're finding the right highs and lows, the right range, but price literally spikes all the way down here in this candle. And again, your stop loss would be nearly 140 pips, way too high. There's no way you're going to take that. So already that is still half of June gone with no trades, no valid trades. And this could frustrate you immensely. But let's keep going. You've got a low here and you've got a high here, a small range. Price breaks through. But look, it's very nearly 50 pips. It is 50 pips. So you're looking for 100 pip profit. This is the absolute maximum that I would take my trade. From this candle here, which has broken through our level, this would be a 50 pip trade and you would be looking for 100 pip profit. What happens? Well, price comes down and look at that, 100 pips, just over 100 pips. What an amazing trade. What happened here? It formed the low, it formed the high, it didn't quite break through the high, it went over the moving average just there and broke through. So you're looking at not quite a 40 pip profit, stop loss, sorry. And it goes down 44 pips, 45 pips. So you would set this take profit to break even, and that's what you would have got, a break even profit just there. So we're going to keep looking. Remember, we're still looking for a sell. So you've got your low, you've got your high here, but price breaks through the high, and so it invalidates the trade, unfortunately. Well, in this case, fortunately, I suppose. Again, we're going to keep looking for the highs, and we're going to keep looking for the lows, but price breaks above, so we don't take this trade. We look for, if I can grab this. So we're looking for the high there. Here's a low. What happens here? It breaks it, unfortunately, so we don't take it. We don't look for any further highs and lows until we know whether it breaks this range. So now we're going to quite simply take our high here, and I think you can see what's going to happen. Price comes down, we've got our low. Now it doesn't break above this moving average, but it hasn't broken above this one either. So we're just going to simply move this low to there, and we're going to move our high to there. It spikes through it but doesn't break through it completely. It goes above the moving average and breaks through. We've got a stop loss of 40 pips. So we're looking at a profit of 80. And what happens? We're getting in the trade right here. It retraces on us for 33 pips. Now we're looking for 80 pips. We've already moved to break even around here, but price keeps going down, does retrace but goes nowhere near our stop loss, comes down all the way to 80 pips. In fact, it goes to nearly 100 pips. So that's a lovely trade. However, waiting for this right kind of setup has taken 3 weeks. So we're still having to wait 3 weeks. And at first glance, you think, well, this trading strategy is you have to be just as patient as the last one. And in a way, you're right. It does still take patience. And I've been advocating that all along, that trading takes patience, no matter what your strategy is. And we've had to wait 3 weeks for this one trade. But there's very little pullback. And then we've made a really nice profit of 80 pips. So I think we said 80 pips. Yes, 80 pips, which was right down here, around here. So we got most of this drop here, which is great. So all these little pullbacks, I just want to remind you that because we're in a trade already, we're not looking for any more of these pullbacks. We're not interested. We're only interested in taking our profit, which was right down here, 80 pips. But once the trade has closed and finished, that's what we're going to do. We're going to look for more opportunities. So here's our level. One is there, and one is there. But look, it's broken our level. So it invalidates it, but it goes up and makes a pullback, but it invalidates it again up here. So we move our level, but this time we haven't got the pullback. The pullback occurs right down here. We do have a nice range here now. We've got a high. Price has broken above the moving average. And then price comes down and literally breaks our level just there. And you're looking for about 31 pips. So price does move down, but it doesn't hit anywhere near our break even of 31 pips. So fair enough, we've made a loss, a small loss there, but we're still 50 pips in profit. Next we get another opportunity. Here's the high. And here's the low, but it breaks, and so we don't include it. Price then comes down and forms the dip that we're looking for. Price does go back over the moving average, but look, it spikes right the way down here, and there's no way. That's 84 pips is just too much. Price then comes down, dips, but comes up way too far, so that's nothing major there. If you've got eagle eyes, you'll see that there's a level here, just there and there, but price breaks above the level, so that's invalid. And this looks a little bit messy here, doesn't it? Price does come down and pull back. You could say that there's a level here, and you could say that there's a level there. And you could say that it's gone above the moving average and broken down below. It would be a 30 pip stop loss. Nearly takes you out here. But actually, it would have hit your break even actually, because here's your break even right down here. So that would have been a trade actually, but a break even trade. And it looks very messy. But if you can pick out these pullbacks where it comes down, pulls back, you can spot the range, draw your levels, you can start trading. So that would have been a trade actually, but not an obvious one. So again, price comes down, you've got your level up the top here, and you've got a level here. Price goes above, but it's not obvious, is it? If in fact, the level might be here, to be fair. Price does go below. You're looking at a 40 pip stop loss. If you did take that, you would lose it. You would lose 40 pips. And so I'm being very honest with this kind of trading strategy, but notice how, again, you've got the level up here and you've got the pullback down here, but it keeps you out of nasty trades at the same time because price doesn't break through and close below this level. So again, you've got your pullback here with your dip, but of course price breaks above your range, so it invalidates. And then again, you've got your level here, you've got your level there. Price comes below the moving average, but of course just breaks this upper level, and now you're looking to buy the market. So now we can look at finding these levels in a buy market. So your level would be here and here, and it does break through on this candle here. A small 22 pip trade, which unfortunately you'd have lost. What about here? We've got a level there, look, and we've got a level here. But price doesn't break for the buy trade, so we are spared. We have another level here and a level there, but price doesn't break it. So it's weird because we're looking for buy trades, but price is coming down. Can you see the downward trend just forming here? Again, you've got a level there. You've got a level there. You want this to come back up and burst through, but it doesn't do any of that. And suddenly you're now looking at a sell opportunity again because price has moved down to below the moving average, and you've got a nice opportunity here on this candle which just breaks through. Got a 30 pip stop loss and it hits your break even. So at 35 pips in profit, you would move this to break even and it would hit your break even. So all the way through these trades so far, we're now into mid-August. We've made more trades. We've had a couple of nice wins and a couple of break-evens and a couple of small losses. So it's not going too bad, and you're getting the opportunity to practice and to trade more often. So we're looking for sell trades, and price burst through your range back up, so we're not interested. Now this is a very, very small pullback. You might not even think this is an opportunity, so it might have been missed, but this candle does break it. It's literally a 200 pip risk. You're looking for 400 pip profit, which you get down here. And it actually went on much further. But the fact it goes further means there's more opportunities. So we can look at this here and this here. Now, price does break, but doesn't stay above your range. So price is above this little moving average, and then it breaks through on this candle here. So you're risking 30 pips. It goes down 30 pips, you move to break even, and it hits your break even. So it's a valid trade. So you've made a nice win here of 40 pips and another break even trade here. We're still looking for trades all the way up, but at each time it breaks the levels. In fact, there is one more here. Look, price comes down, you've got your range there, which you can see price breaks through. This is the bottom of your range. Price doesn't break that for a sell trade. It just carries on going up. And the same keeps happening all the way up until we're back into the buy territory. And you can see already in September that there is lots of buy opportunities. And this is what I was on about. So price has gone up. Here's your top of your range. Here's your bottom. If it breaks the bottom, the trade is invalid. Of course, this does break through just here nicely. You're looking at, say, 40 pips. Price goes up. You're not at your break even yet. You're still not at your break even. Now you're at your break even, and although the markets are closed, well, you would have actually just here before the markets closed on Friday, you'd have hit your take profit for another 80 pip trade. Beautiful, beautiful trade. So you can see there's more opportunities to trade. But what I want to highlight for you as a Forex trader is, obviously, the more opportunities you're looking for and the more trades that you take mean that you're going to be having to concentrate on the charts much more. I mean, generally, the way I trade, because I trade on a 2-to-1 ratio, once the trade is open, apart from having to move the trade to break even when it hits a 1-to-1 ratio, apart from having to do that, I can generally forget about the trade. I can just walk away from it. I don't have to really manage the trade. However, because you're looking for trading opportunities more regular, it means that you're going to have to be spending more time stuck in front of the charts. Now, if you're like me and you have a full-time business, or you have a full-time work, a full-time job, or maybe you've got family responsibilities, whatever it might be, being in front of the chart so often is quite difficult. And you've already seen that in the last 2.5 months, how many trades or trading opportunities, or even potential trading opportunities, there have been with this strategy. So I just kind of want to warn you that trading is great and making more trades is fantastic. It's good fun. If you're excited by Forex trading as I am, you want to be in the market. You want to be making trades more regular. However, you're still going to have to display the same qualities as a trader who only does 1 or 2 trades a month. And those qualities are patience. You're going to need discipline, because your trading rules you will have to stick to. What I would say is, the more you trade, the more disciplined you're going to become, the quicker disciplined you're going to become. It's like, for me, I can look at these charts and go through like 2 or 3 months of data, and I know what my rules are. My rules are a stop loss of no more than 50 pips. I go to a 2-to-1 win loss ratio. When it's at a 1-to-1 ratio, I move to break even. And I know that I'm either trading off the MACD, or I could trade this strategy here, which is slightly different, but nevertheless I can spot the opportunities immediately, and I know what my rules are, so it's like second nature. And that's really kind of what your trading has to become, second nature. So if this kind of strategy you think you like the idea of, then by all means try it. Try it please on a demo account, or try it on an account that just has a little bit of money in it that you're not worried about losing. Please, if you try this on a live account, you need to practice this first. So if you do try this on a live account, please use a very small amount of money, because I would hate you to lose anything at all. But of course, trading carries risks that we all understand mean you can lose money. So please, I just want to clarify that. Be very careful when you're trading a new strategy or one that you're not used to. So I hope you've enjoyed this little strategy. I've done a bit of back testing for you. It's something that you're going to have to practice, but if you like the strategy, give it a thumbs up. If you haven't subscribed, please subscribe to the channel. It helps a lot. And of course, if you hit the notification bell, then you'll get regular updates every time I post a new video. So thank you very much for watching. Take care, and I'll speak to you very soon.